Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the first week of February. And it'll be February 2nd. Market opens up on Monday. We are expecting another pretty decent storm here in the East Coast. I don't know if it's going to affect anything. Maybe a little volume. Who knows? But anyway, we're going to jump right into this. We're going to jump right in, take a look at the overall markets. It's been been a very interesting week with the Fed announcement, the FOMC announcement, some other announcements that were going out in Europe. There's just been a lot of activity. We're taking a look at the daily chart on the S&P, and I'm going to tell you right now, looking at the chart, and you can see it's a pretty organized chart. There's a couple, being a technical guy, a chart reader, we look at certain patterns in the market. These are patterns that typically repeat themselves. So you'll hear me talking about wedge patterns, channels, flags. And those are some of the more common ones and the ones that really do play out over and over again. And it's identifying those and finding the best probable entries into those patterns and knowing what to do with them. So, with that, you can actually see there was this nice rising wedge pattern. Everything with the stochastics is probably the other thing we pay attention to. The combination uses a stochastic oscillator, just giving us momentum. And when you get the momentum getting a little extended and we push up against an area, maybe it's a resistance area based on a pattern, or a trend line or a channel line, you add that all together and it gives you a better probability of a pullback. And you can see the market got oversold here and we started pushing back up and we got that wedge pattern. The rising wedge typically breaks down. And what happens with the breakdown, you do usually get those bounces and then you have a rollover. And this could be seen on the 60-minute time frame as you start to time your entries. Looking at the bigger pattern is always great because you want to know what the big picture is. But then we start to break it down on the 60-minute time frame, and more importantly, the 5-minute combination with the 60 works really good. And that's the big chart we're going to look at this week, because you're going to be blown away by some of the things that we talk about each and every day here and see them play out. So first of all, let's talk about this wedge pattern, this rising wedge pattern. And what you're seeing, some shaded areas here, we could actually see in a rising wedge pattern, you're going to make a series of higher highs and higher lows. But it's going to be, the underlying low is going to give us that ramping trend line, and it's going to give us that appearance of exactly what's a wedge, two trend lines here kind of converging. And you get into an area which we call the 65-75% area of the wedge, and that's when we break down. And this is basically perfect example of this. Overbought, pushed up against this, top part of the wedge, and we pulled back and we bounced, then we rolled over and we broke down. Now, the breakdown always is followed by a retracement. Not always, but what you look for is the test of the pattern. You break down from the pattern, and then you push back up. And as you can see, we push back up, and this happens a lot on channels also. So when you have an underlying channel or a wedge, what happens is you'll break through that channel line, you'll come back to the underline of that channel line, typically test it, and lots of times if you break down to that channel, if that was if this was a channel here and not a wedge, equal distance between the two trend lines, this would be considered that breakdown, and that retest would be that right shoulder. And you'll see that this has this tendency to look like a head and shoulders formation. You have a higher high and a lower high here, and the lower high coming in with with the stochastics here rolling over at the extreme level here is perfect. So at that point, we're definitely had caution on the table and looking for that downside push on the daily. But the 60 has been also shaping up really good. So now we know that the daily is rolled over. We came up, tested it, pulled back, and it's been very choppy. And it's given us enough time to almost get oversold here, which is, that's going to come into play probably next week. But as we're watching this, we're also paying attention to that 60-minute time frame. And even on the 60-minute time frame, you actually see there, we actually pushed up and said we're going to pay attention for the failure here. And we actually did get the failure, pulled back down. We bounced on support lines here. We got oversold, bounced, pushed back up here, and then started getting really choppy. And at the end of the day on Friday, we sold off pretty hard. We'll look at that. So now the real key came in here as the 5-minute chart. This has been, this is something that's, it's just a beautiful picture here. And what I'm going to show you is something that we specialize here at Day Trading Radio. One of the biggest combinations I look for, of course, is the multiple time frames or the tradeometer setup, but also what we call lane divergence. And lane divergence is it's a great technique. It's where it's a momentum shift. It's diverging from the price The momentum shifts before the price heading back up, but the price then soon follows it after. And you can easily see it if you learn the right way of identifying it. And it's pretty easy to find. It's when the price here makes new lows, but the stochastics turn back up and not make, doesn't retest the recent lows, or at least puts in a higher low. And we were concentrating on this a lot this week. And every instant of that lane divergence, even going back to the 28th, we had one here. We had a nice pop on that. We had one here the day after, I believe. We had another nice pop. We actually had one here. You can see the rally from each one of these pops in the market has been started with a lane divergence. And, when we look back at the chart and we look at the S&P futures here, which we trade each week, we kind of focus on this. We break these down for you live. So when we do see that lane divergence here, it's also giving us a tradeometer setup. And these little areas that we mark off here are usually time zone areas that we like to trade. So here's one, here's the topping pattern, here's another buying zone, another buy zone. You can see the reaction off of these. Here we did break down through, and that was coming into about 3 o'clock. And, 3 o'clock on a Friday trade sometimes could get, that wasn't even on a Friday, was it? But here's our 3 o'clock Friday trade. Wasn't paying. I was actually doing some research, but the patterns have been very similar here. Here was our her buy trigger. Here was our sell trigger, and then as he came into about 3 o'clock, we started selling off more aggressively. And at that point, I was actually deep into some research, so I wasn't really paying attention to putting the alerts on here. But the one thing you have to remember, if Fridays and anytime getting closer to the close, I tend to back away and just kind of let the market do what it's doing. And, I kind of call it the sweet spot is usually between 10 o'clock and 3 o'clock. Anything after 3 o'clock, I kind of shy away. Anything before 10 o'clock is usually a little, it's easier to trade. It's not that hard. It's just that you have to be a little more expecting bigger swings. And then once you get into the meat of the day, you can actually start to pick off these beautiful levels and feel just good rotation and understand what you're looking at, and everything works out great. But just going back to that 5-minute setup here, just a thing of beauty. And I have to just kind of bang the table. We continue to look at this type of setup next week. So when we have a lane divergence tradeometer setup, be sure to consider that as an active trade, at least on my side. And the same thing on the downside. You can actually see lane divergences played to the downside. So our 5-minute chart we ended up leaving off a little extended. There was some weakness. It feels a little weak. The market feels like we could go down a little bit further. Remember, the daily is not quite oversold yet, so we could actually flush through this little support level, get us back down to the 200, maybe even a little bit further. We have a big channel line back here. We'll let these things play out. But what we're considering, or what I'm really concerned with, is just taking the shorter time frames, being able to scalp some of the better positions, and then and other things, maybe with equities, timing our positions so we have good entries on quality names, and we take advantage of them, and we take them off when we get those bounces, and never being in over our heads, and understanding how the tide is going and what I call the wind in your sail. So again, the 60-minute time frame here, wind in our sails, pushing it downstream here a little, call it that. And then the 60-minute time frame, even though we got a little bounce, we sold off pretty aggressively on Friday. At the end of the day, do we have a bounce on Monday? It's hard to say. I'm not going to look into it. It's kind of crossed back over. I'm almost thinking that we have a good shot of actually breaking down through the support line. Excuse me, and then concentrating on some other levels that might be setting up. There might be something, down here a little further. There's a recent low back here, and so as we get down to this zone here, low here, 1973. 1973. That's what we'll be watching here. 95. So that's another 20 points lower on the ES just to get us down to that recent low. So it's definitely in the cards. We have to consider that when we look at the watch list this week. I'm very excited about the tradeometer. It's been killing it. Friday was real tough because I had to get out of here early to do a Pinewood Derby thing for my son at Scouts, and I'm happy to report that we won. I'm proud of him. He won his in his pack. He won. That's it. It was great. I was so nervous about that going into that. I was like, geez, I don't want to let him down. We worked on this car, and we ended up, just doing real well. It wasn't too much of a competition out there. It was a good fun time. So now let's get into the watch list. And remember that we are expecting some downside. I would not roll out a little more downside in this market to the downside. But when that hourly gets set up again and we have an hourly 60 combination, hourly gets down here to 60, maybe rolls back down, and we end up having some trend lines or maybe a divergence, well, you're going to see us, or see me actually make that point to, start paying attention to this market. We're going to watch for those candles to start developing. But right now we're seeing a lot of red up here. Kind of a topping pattern, maybe playing out with the head and shoulders formation. Definitely a wedge breaking down. So definitely seeing some more downside action, but not too much. Not looking at a big change of not looking at anything really severe here. I think we actually have a good shot of pushing a little bit higher, just resetting a little. All right, so let's take a look. We have a huge list for you this week. Huge. And I don't like to give you too much, but there's just so many stocks that have set up on trend lines, and I want to just, again, put a note of caution out that if the market does break down and we start to see a little bit more selling, maybe there's actually some news to go along with it, that we actually might push through some of these levels. Now, what I just noticed here, if I actually drag this little wedge line up here and connect it to this pivot area up here, from this pivot area up here to the right shoulder pivot area, leave everything else where it is. Let me make sure I got this. We bring that up here. Let's see what that looks like. We're actually starting to see what is starting to appear to be a really nice looking channel here. Yeah, right here. Look at this nice channel that we're in now. So again, just actually, didn't notice this before, but now actually seeing this one pivot, two pivot, there's definitely a three pivot, even that gap back here, given that a four pivot. That 200 period moving down, that lower trend line here really does stand out now. We'll just take a look at that 60-minute time frame one more time. You could see it here. One, the right shoulder, left shoulder. This would actually be an excellent target to look for down here. Probably even adjust a little bit more, but basically we're looking at anywhere from 1960 to 1950. 1960 to 1950 would bring us down to that trend line. We'll see how everything lines up. And if we actually get that rotation on the the setup here, the nice little rotation on the 60 and that daily deuce and everything lines up here, it's going to look like a really nice level. Don't mind taking out that recent low here, even though people might get scared of it. But again, 1950, 1960 to 1950 area, I'd pay attention to that line a lot. That's going to be a nice little pattern. There's a nice little thing that's setting up here, and again, it would actually fall into place here with everything else, the rotation, the follow through on the daily and stuff. So with that, and again, just to go back, expecting a little more downside. So the patterns you're going to see here, I would give these a little, just watch them, see if they start to hold, see what we're looking for in important candles that we might be seeing, invert reversals. This is a nice watch list and great stocks to watch, but I'd also pay attention to the market and make sure we don't get tremendous selling into this and see it drag us through some important levels on these setups. So let's kick it off right now.